Did you get that?
Got it.
Okay. Recording. Okay. Well, thank you so much for coming to, I should probably share my screen as well. Part 3 of 4. Just 1 second. Get our little PowerPoint up. Can you see that?
I see it.
Okay, perfect. So we have talked about cryptocurrency, what it is, why it's so important. Maybe at this point you want to invest a little money into it. I want to show you how easy it is to do that. And we're going to talk about the different methods of investing and the different techniques used to invest. And I want to focus on doing this for an average person as opposed to someone who's really experienced in the space. We've already gone through this before, but I do it again just because I want you to know I am not a teacher. I'm not good at teaching. I am not an expert in the space, and definitely most 100% not a financial advisor. I am just someone who really likes crypto and wants to teach other people that it's not too overwhelming and you can get involved in it too. So last week, what we talked about were the different types of cryptocurrency and what they do. And we also learned how kind of the movement of Bitcoin, because of the way the Bitcoin code is written, dictates the movement of the rest of the market. We talked specifically about Bitcoin and Ethereum, which are the top 2 market cap coins, but there are over 4,000. Most cryptos use blockchain technology, and that's just a method of storing transactions securely. So you've seen the price is kind of going parabolic since the beginning. Maybe you want to get into that. Let's talk about the different ways that you can invest in cryptocurrency. You might think that it's just about buying the actual cryptocurrency and holding on to it. And that is an excellent, excellent way to invest in crypto. But you do have some other options that range from a little bit more traditional to a little bit more risky. So there are crypto related stocks. If you already have a stock portfolio, you can look into companies like Riot and Marathon, which invest in blockchain technology and Bitcoin mining. So anytime the market makes a move, those stocks are going to move as well. And they tend to move in the same direction based on how Bitcoin is doing. There are also some other kind of more tangential stocks you can get invested in. I think iPay is the ETF that has a lot of different digital investing things like Venmo and PayPal, or maybe it's just PayPal and MasterCard and things like that. So if you wanted to stay really traditional and safe, you could just invest in stocks like that. And then as those companies integrate crypto technology into their options, you and that stock is going to get the benefit. There are not any Bitcoin or Ethereum specific ETFs at the moment, but that's something that is in the works, and that would be kind of a more traditional way to invest. And it also gives you more stability than investing in the coin, theoretically. And obviously you can just buy the coins yourself. However, you can also do futures trading. And that's something I would really only suggest for someone like Kenneth here, who has a good understanding of charts and chart movements and things like that. But with futures, you're using leveraged assets. So, you know, if Bitcoin goes up by 1% and you have bought a long on that, then you're getting 5%. I really want Kenneth to get into crypto futures because it's just, I've made some good money in there, but it is really something that you should only do if you've been in technical analysis for a while. So those are our different options. I'm not going to talk about how to buy stocks or how to buy ETFs like that. If you do want to know that, you can go follow Kenneth at Trade Invest Simplify. But I do want to run through some different ways that you can purchase cryptocurrency. And you've probably noticed that PayPal, Venmo, Robinhood, some of the more mainstream companies are allowing you to purchase crypto through their platforms. I would rather go through a platform that's specifically designed for crypto, but that's just me. But there are a couple of different strategies that you can consider when you're like, okay, I want to get into this. How am I supposed to know when to buy and how much to buy? So again, these are really for investors who don't want to spend a ton of time looking at charts or understanding price movement and things like that. DCA, we mentioned before, is dollar cost averaging. And that's just putting a specific amount into an asset over a regular time period. So if you look at the chart below, you can see this is a fictional crypto price movement. But if you had put, let's say $10 into this fictional asset at the beginning of each month, what you're doing is grabbing various amounts, based on how much you're putting in. And over the course of the year, the price is going to go up and the price is going to go down, but your average cost basis is going to be evened out a little bit. It's going to take all of this movement into account. And that just means that you're not going to be as subject to the big ranges down and the big ranges up. This is, I think, the most popular way for most people who don't want to trade, who want to actually invest, to do that with crypto. The other things you can do if you feel a little bit more comfortable with reading candlestick charts or things like that, or if you understand the specific price movement of an asset. So one thing you can do in a lot of crypto exchanges is to set limit buys. And a limit buy, a market buy, is just purchasing it at whatever cost it currently is. Whereas a limit buy is setting a specific price at which you want to buy it. So let's say Ethereum's currently at, I think, 2,900. We want to get in when it goes down to 2,500. So you can set a limit buy, say I want to buy 0.1 Ethereum when it comes down to that $2,500 level, because I want to get it at a discount. You're going to set that, and as soon as Ethereum's price comes down there, your order is going to get picked up, and that ensures that you're getting it at the price you want to. Now, obviously, you have to know what's a good price. Is that limit order going to go through? And the other thing with limit buys is that you might, with the volatility being what it is, you might end up getting missed out. If it goes down or up too fast, you might lose the option to get it at the price that you want it. And again, that's why dollar cost averaging is probably the most efficient way to build your crypto profile without having to think too much about it. The other option, though, is actually taking a look at the chart. And you don't even really have to know too much about the price movement or where it's been or where it's going. You just want to look for the red days. The times where it's been redder for a few red candles in a row, that means downward action. As long as it's not a straight downward trend, it's probably, if you see the kind of vacillation here between down and up, if you see something like this, you could buy the dip and put a little bit in on those red days. It's different than dollar cost averaging because you're not doing it on a regular basis, and you're probably going to have to pay way more attention to charts and have a better understanding of technical analysis. So buying the dip is something that a new investor could do. It just takes more time and has kind of a higher risk of being left without capital, in the case that you buy all the dips and then it keeps dipping, which I think we've all been there. If you keep buying the dips, eventually you have no more money and it goes down 50%. And you're like, darn it, I wish I had more cash to invest in this right now because the price is so low. You don't have it. You've already bought the dips. Not speaking from personal experience at all. So those are a couple different strategies that you can think about as you're going to invest. And now we're going to talk about actually the mechanism of just buying crypto. There are probably thousands of exchanges. And if you're in New York State, which me and a lot of my friends are, you're going to be limited on your options as far as what platforms you can use to buy and sell crypto. And even amongst the states that are kind of freewheeling in terms of regulation, Coinbase is kind of like the top. Coinbase is almost kind of like the Google. It's easy to use. It is actually a publicly traded stock, so the company itself has some corporate backing. It's solid. It's insured. So in the event of any type of foolery, your money is going to be safe, and it's just easy to use. So in order to actually buy some cryptocurrency on Coinbase, you'd want to sign up for a Coinbase account. And there are two different apps, Coinbase and Coinbase Pro. It's the same company. Coinbase is kind of just like, I don't know, I would say like the boomer app. If you're someone who has an iPhone and understands how to use apps, I think that Coinbase Pro is going to be just as easy for you to use. It's not that much more complicated. And the fees for trading on Coinbase Pro are cheaper. But you do want to start off by getting a Coinbase app. And that's going to require you to connect a savings or checking account so that you can move US dollars over into your Coinbase account, and then you can exchange that for cryptocurrency. So these are just a couple of screenshots to show you what the actual interface looks like. You can see that it's very simple. Over here on the left side is what you're going to see when you first sign in. And this just shows you how the markets are doing, the market trends. It's essentially just going to be line graphs to show the movement. And then over in the right-hand column, we see the current prices of that. And then down at the bottom, we have our different areas of the actual app that we can use. So you can see that this is the chart all the way at the left. But if you were to click on the little pie chart, the second icon down there at the bottom, that's going to show you your portfolio. And you would use that deposit button. This is Coinbase Pro, by the way. Download Coinbase, make an account, also get Coinbase Pro, log in with the same credentials, and then use Coinbase Pro for trading. I blocked everything out because I don't want you guys knowing about all my money. But this is my actual Coinbase portfolio. It'll show you the percentages of the assets that I own or that I hold directly on the Coinbase app. I'm just gonna shut the door real quick so that if that happens again, I don't have to murder my dog. Normally Ryan is keeping him occupied in the other room. Okay, so what you would do here is just deposit your USD, go back over to the little chart page, click on whatever currency you wanted to buy, and really you can just put in the amount of money that you want to spend and click buy. It's really relatively easy. I don't think Kenneth has had any difficulty linking his bank to Coinbase. I have not heard really of many issues with people using Coinbase and Coinbase Pro. And so that's why I would say, in my opinion, it's the easiest for a newbie. Some of the other big names that I know people use a lot are like crypto.com, which is a website, Kraken, Binance.us. Those three, you can't use them in New York State. There are some workarounds, but for the most part, the only two exchanges that I use in New York State are Coinbase and KuCoin. I can get kind of all of the mainstream coins and tokens that I want on Coinbase Pro. If I can't find something on Coinbase Pro, I will look in KuCoin because they do have, some more of the obscure altcoins on there. If I can't find it on either one of those, I give up and say it's probably not worth it. There are a ton of other ways to get whatever coin and token that you want. Regardless of where you live, if you ever come across a coin that you cannot get on Coinbase or KuCoin, hit me up. I will explain how to get something like that. It's just a little bit more complicated. And yeah, Coinbase Pro is pretty safe. So that's where I do keep some of my currency because, as we'll get into a little bit later, it does make it easy to buy, sell, transfer when you hold your crypto directly on an exchange. And depositing money is the exact same as withdrawing money. If you decide you've made a good profit on your Ethereum, you can sell it back into USD, and then it will, you'll have a USD available balance here, and you can go ahead and withdraw. And it's going to take, 2 or 3 days in order to move back into your checking account. It's really easy. It's well integrated. And in my opinion, it's very safe. So we talked about buying the cryptocurrency. And that's, I guess, the initial investment that you're going to make. But staking is kind of a secondary investment option. Staking is earning interest on whatever cryptocurrency you have. And so I first of all wanted to give you guys just a look at the KuCoin platform, which is what we have on either side of the screen here. It's a little bit more complicated and took me longer to understand than Coinbase. So if it's something you can avoid using, just buy your Bitcoin, Ethereum, Solana, Polkadot on Coinbase Pro. I think that's wonderful. I do think you can stake assets on the regular Coinbase app, but I only have experience with staking on KuCoin. So essentially what you do when you're staking is like taking the money that's yours and putting it in a bank account. And it's still your money. You don't necessarily have immediate access to it because it's at the bank. And in staking, you're going to have to either agree to give them your crypto for a specific amount of time, and or you're going to have to wait a specific amount of time in order to pull it out. So what you get from that, though, is interest in the native token that you're staking. So you can see here, over here on the right, my Pool X account in KuCoin is where I stake my Polkadot. You get to kind of choose your terms. I think I get about a 12% interest rate on my Polkadot, which is fantastic. But in the world of cryptocurrency staking, 12% is kind of like bottom of the barrel. You can get, I think maybe like 4% for an Ethereum, but then there are things where you can get hundreds and thousands of percent in interest in order for just staking the cryptocurrency that you already have. So it's just it's the same exact kind of risk relationship when you're looking at market cap and, should I buy this crypto? Does it have the runway to go up and grow, or is it kind of at its peak? It's the same thing with how much interest you're going to get from staking. A higher market cap coin like Bitcoin, well, not Bitcoin, but like Ethereum, it's lower risk to stake those options. You're not going to get as much in interest because the Ethereum network doesn't really need your one Ethereum in order to keep it going. However, a lower market cap coin that does not have the liquidity and the stake tokens in order to keep it running, they're going to give you a much higher percentage in interest in order to stake your assets. It's going to be a little bit higher risk. We're not going to get deep into the risks of staking. There are some, and that's why when I stake, I choose to do it only with tokens that I plan on keeping very, very long term. Polkadot is one of them. I believe Polkadot will stand the test of time and still be around in a couple of years. So I don't mind that my Polkadot is locked up a little bit. Now, if Polkadot was something I wanted to sell in the near future, it's probably not something I would stake all of my holdings in. Because again, if I wanted to, that Polkadot that's in there, I think I might have like, it's not that much, maybe like 15 or 16 dot. I think that's right. But, I've got maybe an entire Polkadot in interest since I started staking relatively recently. And sometimes they auto compound and sometimes they don't. So with this one, it won't auto compound back into the original investment. With the other, I also stake Solana on the Phantom wallet, and that auto compounds. I think those are the only two coins that I'm staking, to be honest, because those are the only two coins that I have the relative ease of accessing the staking pools and want to keep long term. So it's a good way if you have a project that you really like, that you want to hold on long term, to increase your holdings. I will tell you a little bit more about where to find out what you can stake and where. And I actually haven't used this tool myself up until very recently, but I think it's stakingrewards.com. So if you think of CoinGecko as the site you can go to and look at and see, okay, what's the basic information about this coin? What's the market cap? What exchanges can I buy it on? Stakingrewards.com is kind of like that aggregated information for staking. So you can enter a specific coin that you want to stake, find out the different platforms you can stake it on, where you're going to get the highest amount of interest and stuff like that. Every exchange is going to be different. The types of coins you can get on every single exchange is going to be different. And again, that's why I choose, for the most part, to keep it simple. Buy my big coins on Coinbase Pro, buy my smaller altcoins on KuCoin, and then obviously we're going to need a place to store those things. So like I said, you can keep your cryptocurrency directly on an exchange, as you saw I did in Coinbase and KuCoin. I have what I would consider a large amount of money, but to what others is probably not that much money on those exchanges. And that's because I want to have easy access to them. I want to be able to transfer them quickly from one exchange to another. If I see that the price is going up or down significantly, I want to be able to have the option to make a decision immediately with buying or selling that crypto. However, when you hold the cryptocurrency on an exchange, it's not actually yours. And there's a saying in crypto, not your keys, not your money, not your keys, not your crypto. And the keys is the 16-digit phrase that is attached to every wallet, that essentially means that it belongs to you. So on an exchange, you're not going to have that. And so theoretically, it is a little bit riskier. It's easier to hack into. And you're also subject to any type of network crashes that that platform encounters. So I have been on KuCoin when KuCoin stops working. If my crypto is in the KuCoin app, I'm just stuck. I'm stuck holding it. I got to wait until KuCoin starts working again in order to do anything with it. A digital wallet or a hot wallet is going to be the next level of security because you do have the keys that go along with that. So the crypto belongs to you. But it's digitized, right? So it's going to be easy to, and the nice thing about Coinbase is that Coinbase has its own wallet too. So you can move your money from Coinbase Pro to your Coinbase wallet without any extra devices. You can do it all on your phone. So that's the extra level of security. But again, it also takes an extra step to get that money into an exchange where you're able to buy and sell it. The most secure option is cold storage, a cold wallet. I have a Ledger. And so this is an actual physical device. Mine's pink. It has a little USB port. You connect it to your computer. You have to get the Ledger app for your computer. It's a lot of steps in order to put your crypto on here and then ultimately take your crypto off of here. Now that's good because we'll get into NFTs in our final week, but when you're a spender like me and you say, hey, I have some Ethereum on my Ledger wallet, I'd love to take that out and spend that on some NFTs. I have to go through a lot of steps in order to do that, and it makes me think twice. This is the most secure option you're going to have in order to add money to it or remove money from it. You need this actual thing. You need this actual thing, and you need your passcode. So no one in another country is going to hack into this device. They can't. And that's why the cold wallet, cold storage is the safest and securest option for storing your crypto. What most people will do is get this, have their key phrase written down, put them in two completely different but safe locations, and that way it's almost foolproof. Like I hate to say that anything's foolproof, but there's almost no way in hell that anyone would be able to access the funds on here unless it's you. And in hearing that, you can understand what the downsides are. It takes a lot of steps. You have to keep track of this tiny little digital device. If you do lose it, as long as you have the 16-digit key phrase, then you'll be okay. If you put this through the washer, it stops working. That's okay. You can get a replacement device as long as you have the keys. The keys are the most important. So there is also the risk that you lose that key phrase, in which case you better make sure that this never stops working. So those are your different options for storing crypto once you have bought it on an exchange. I talked a little bit about the stakingrewards.com, and if you're interested in finding out more, I know that my husband really wants to know about staking and how to earn interest. And if you're into doing that, I would suggest checking out Mac Lorden on TikTok because he knows a lot about staking. And he's actually the one that I learned about staking rewards with. These are some sites that I've already mentioned. But when I think about the resources that I use the most, it's really just people. I'm in the incubator Discord, and there are a lot of developers in there. So we do spend a lot of time talking about different coin projects, when we're getting in and when we're getting out. Same thing with Crypto Night. The only thing is Crypto Night is not free. The incubator and Faceless Crypto are both free and will always be free. So there's, you can do as much research on different websites as you want and download all the apps you need. It really is never going to replace speaking to someone about this type of stuff and having more of a dialogue about it. So just to recap, there are a lot of different investment strategies when buying cryptocurrency. In my opinion, for the newbie, it's best to keep it simple. And keeping it simple means dollar cost averaging, or putting a certain amount, say you have $20 a week that you want to put into crypto. Set an alert in your phone for Friday evening. Tonight, I'm going to move $20 from my checking account to my crypto account, and I'm going to buy whatever cryptocurrency I'm currently investing in. That's going to keep your risk low. And you can do that right on Coinbase Pro, and then you can get a hot wallet with Coinbase, and that's not going to cost you any money. The cold storage is relatively cheap, but it's still an additional cost. Doing everything online does have the benefit of being free, but if you're getting into the thousands, $5,000, $10,000 worth of assets that you plan on holding over the long term, that's when I would say it's time to get a cold storage device, just in case, worst case scenario. The other thing that you can do to invest in cryptocurrency is purchase NFTs. And that is going to be the primary focus of next week. You can see on the screen here right now, NFTs are super duper basic. These are just JPEGs. They don't move, they don't do anything. Some might not even find them aesthetically pleasing, like me. But this is a part of the market that's currently exploding, and you can see by the dollar amounts next to that, that is what I sold these assets for. So I bought I don't know what my buy-in price was, but these were all profits things that I sold for a profit, and what I would consider to be kind of a ridiculous amount of profit. I think learning about NFTs is really important because it is going to become more mainstream. We can already kind of see it in the baseball cards, or I know that there's a WWE digital asset that's coming out soon. This is only going to become more mainstream, and the utility of it is only going to continue to grow. So even though these may look very simple, and they are right now, if you think we're at the beginning of crypto, which we are in the absolute infancy of NFTs. So next week will be devoted just to NFTs and what the hell's going on with that. I think that's all I've got for you. Any immediate questions, and then I will stop the recording.
I have no questions because you answered mine.
Awesome. All right, let me stop this just as the dog starts again. How do I stop the recording?